How's everyone doing tonight? Thank you for coming to join. I appreciate you first and foremost. So tonight I want to talk really quickly about the importance of pretty much patience and not trading every single day. And also I'm going to open it up for just quick discussion and some questions. So if you have any questions, just feel free to drop them and I'll answer them when I get there. But the first and foremost part is pretty much the unfortunate part, honestly, is if you think about it, most new traders are very enticed with the fact that they think that they should trade every single day. That's their mentality. Their mentality is, if I do not trade today, I will not make money, right? That's a very, very poor attitude to have, because not every trading day is a good day to trade. So like, for example, you can just see on this chart, which do you think is a good trading day and which do you not? It's pretty clear. That's a trading day, that's a trading day. You know, you kind of get the picture. Like, these directional days are the trading days. Like, these type of days, that's another reason why I didn't really signal today, is because, like, if you look at this, nothing really happened. It happened very briefly, but nothing super major happened until kind of the end of the day, when the market makers unloaded their inventory. And so that was like, this 30 minutes and like this 30 minutes was pretty much the only thing that was really, really lackluster this entire day, right? So like, you got to recognize this. If the market is choppy and range bound, which we are technically range bound, you don't really want to just be trading that and sitting here all day just to trade that. It's not like, that's another thing that I fell trapped to. Like, when I first started trading, I would literally just sit through this. I would sit through every single one of these ticks. Like, I would sit there from market open to market close. And it would just be so draining to your mental health, because most of this stuff, like, unless you're a scalper, unless you're very, very quick in and out, this is garbage to trade. Like, this price action is basically garbage, besides like a little leg here and a little bit right here. So, you know, that's something that you want to think about. And then another thing is, if you think about it, let's say you're trading 0 DTE, right? What do you think will happen if you're in 0 DTE for hours and it's chopping around? Like, if you bought 0 DTE pretty much at open and you kind of just sat through it, and you didn't cut, even if the leg actually happened, like, let's pretend something, for whatever reason, we'll use this as an example. For whatever reason, let's pretend you bought puts here and you decided to bag hold. You didn't take any profit here, no here, no here, but then finally you decide to take profit here, right? So like, that's, you know, just an example type of thing. Even if you are indeed in profit per se, because you held 0 DTE for literally hours, sitting in chop, sitting in all this stuff, the contract premium is completely decayed, basically. Like, you're not going to make very much money. So let's give you an example. Let's pretend if I actually traded this, let's just give it a what is this? Let's say it's $100 per contract, and let's pretend I'm way down here. All right, let's pretend I end up bag holding and I don't cut until way down here at the end of the day. And I'm also down probably another like $1 here. This is probably like $75, maybe $75, because simply because of the complete, the theta decay, right? So that's something you want to be thinking about, just not just blindly trading 0 DT and then just holding it and holding it and holding it. Like, if it's not working in your favor, the first pretty much 30 minutes, just cut it and re-enter. Like, you don't have to sit in it, because then even if the move does work in your favor, like a couple hours later, that doesn't mean you're going to make very much money. Like, it's much more advantageous to you in the long run if you literally just cut and realize, hey, maybe I just entered prematurely, but the setup is still valid. So I'll just get in maybe in 30 minutes or maybe in 15 minutes, whatever the case. Maybe it could be hours later. So like, I'll give you an example. This happened last week. So people were, where is it? which one was it? What day was it? This one maybe? Yeah, here it is. This is the day. So I called this out in the chat a while ago. This is pretty much what it was a gap and crap. So this is a pretty common thing. What happens is it gaps overnight. And what we need to see here is a follow through. We need to see follow through right in the morning for continuation. We did not see that. So I was bearish pretty much right on this sign. But if you decide to buy puts, you wouldn't have been rewarded for, a couple hours later, like hours later. So this is another example where, yes, your thesis is correct. You are bearish, but if you bought 0 DTE and just set through chop and chop and chop, even if it ends up going down here, sure, obviously you're going to be in profit, but you're not going to be anywhere near what you could have been if you just possibly, okay, maybe I'll take this leg down for puts, but I'm not going to sit through all this shit and I'm going to wait for another confirmation. Here's a good confirmation when we get a lower high. So maybe you could re-enter that. Like you want to be flexible with yourself. You don't want to just be static with your thinking, like, okay, I'm in 0 DTE. It's either a make or break it type of thing. That's not always the case. Sometimes the trade is still validated, but you just possibly entered prematurely, right? So like there's been times where, like the other day, like the trade works for me. Where is it? The trade works for me, but it just takes a little bit longer to actually unfold, right? Because this is where I got pinged out on Friday. I got pinged out right there, and I knew in the back of my mind we were bearish, but I ended up having my stop loss a little too tight, and then that's kind of what happens. So it's okay to just get right back into the trade. Like you could just re-enter somewhere along the line. You don't have to think up it pinged me out, time to get out of the trade. So like that's something I really wanted to make apparent to you guys, because people think they have to trade every single day, and I promise you this is not the case. You have to understand, if the market is choppy as shit and we're in a range, these are the days you don't really want to be caring much about it. If anything, maybe set some alerts. Like, okay, here's the range. Maybe I'll set an alert, like right here towards the top or right here towards the bottom, give myself a little heads up. And this way, I'm not watching the market. I'm not just sitting there doing nothing, just watching basically paint dry, because the first couple hours of the day did nothing. It was garbage, right? This price action is garbage. You don't want to be trading this stuff. If anything, if you do decide to trade it, which I wouldn't recommend, you understand, hey, this is clearly not a directional based day. That's direction. That's direction. This is not direction. So this is what is known as a risk off day. When I say risk off, it means you use half of your size. Let's pretend you are in, say, 4 contracts. That's your normal amount. You enter 4 contracts. You have identified this is a risk off day. Therefore, you will be purposely sizing down and only entering 2 contracts instead of your normal 4. This is important. You don't want to be using your full size, because there's a lot of indecision. We had a lot of wicks, lots of indecision, lots of volatility today. Something you want to be aware of. Whereas you identified, okay, this is more of a, we're getting lots of strong drives up. Every single pullback's getting bought up, and this looks like more like a directional day. These are the days you want to use full size. So like every single pullback got bought up aggressively. Bought up, right? You kind of get the gist. Same thing on the downside. The pullback got bought up. Like these are more directional days. And then if you compare them, these are just like the pullbacks didn't get really, the pullbacks didn't get bought up. They were just lackluster. There was no follow through. This is a range bound choppy day. This is a directional day. I don't trade these type of shit days. I trade these days. You want to know why? My risk to reward is heavily in my favor. These days are too choppy. I don't really like to trade them. That's why I was very inactive today. That's pretty much my main whole gist of this. You do not have to trade every single day. You want to identify what type of environment we are, if it's in a range bound day or if it's in a very strong momentum based just directional based day. Those are the days you want to be aware of, because these are the days you can make the most money, right? So that's pretty much my gist on that, because that's like a very common misconception I see with new traders is I gotta trade, or if I don't trade, what happens is I'm just I'm it basically equate to like, if I don't trade today, I'm a failure in a sense, right? That's cut and dry. That's what you think, and you think you're not going to make money. But the silver lining is like, the market's going to be here for you tomorrow. The market will be here for you 3 years from now. You know what I mean? So like, just because you didn't trade today doesn't mean anything. Because sure, maybe I missed out on this, but there's going to be another type of day like that in the future. So that's, as long as you understand how to identify those days, you can capitalize on them. And I've talked about this a lot, but I'll just say it again. I know like most of my 6-figure, 7-figure trader friends don't trade every day. They trade probably like 3 days a week, 2 days a week. And yet guess what happens? They're being more selective with what they trade, and they still can make their profit targets on the weekly basis and a monthly basis. So that's just kind of some food for thought for you guys. If you have any questions about that, feel free to ask it now. I'm going to read some of these questions, and then we will answer some stuff. Probably in the next like 10 to 15 minutes, we'll do some questions. I wanted to do a shorter lesson today, but let me just read some stuff. The thing is, how did you know that was going to be flat? I mean, you can kind of see like the first couple hours, it's like you can even see like pretty much right out of the gate. We didn't really have much, because usually what you see here, like you can see pretty much within like the first hour of the day if it's going to be choppy or not. Because usually it works like clockwork, right? Like anywhere from 9:45 to 10:30 a.m. Eastern usually will have some sort of reversal. In this case, it worked exactly like clockwork, 10:30, right? But look at that, we had no follow through, right? So like this we came right to VWAP, rejected. We had a nice little higher low, and then what we want to see here is we want to see a lot of strength. Not that much strength really. If you look here, like the volume was pretty low most of the day, right? So like you want to be aware of volume, and you would just want to be aware of like the initial morning, like the first hour and a half. If it's super choppy, then just walk away, set some alerts, and then just come back later, because there's multiple, not all the time, but there is examples like last week that the first couple hours were just super trash. But then we got that extremely nice leg down right after lunchtime, right? So this is why you want to not just watch the entire the entire like price action. Just set some alerts, close your app, do something else. You don't just gotta sit there all day. But yeah, hope that answers your question. One sec, what else is there? Just reading questions for you. Blew my account on 0DTE SPX. Yeah, that will happen to you for sure. I kind of already addressed that. Please be aware that if you are trading 0DTE, what you want to see is direction, and you want to see it quickly. You do not want to be sitting through chop, because if the more you sit through chop, the more decay is going to happen, right? So that's a general rule of thumb for me. If it doesn't go in my way for like the first 30 minutes and it's clearly still choppy, then I'm just going to cut, and I can always re-enter. So just keep that in mind. One sec, still reading. What's the best way to know not to get in? Can you explain the volume aspect? Yeah, absolutely. So you can kind of see here, like what we want to see is you want to see follow through, especially off the lows. Like you can see here, we had a strong bounce right off the low, right at this 10:30 a.m. But then you can kind of see as we drove up, the volume was really lackluster. Like the volume was very little, follow through. And look at look how it didn't really happen quickly. you can see all this indecision here. We had lots of indecision. We had lots of fighting back and forth, right? We want to see, if we want to see a proper, reversal continuation type of trade off the lows, you want to see volume constantly stepping up, like higher than its predecessor. Like what you need to see in this case, if we want more of a strength move, like you see this volume bar, we want to see the next one pretty much at least equal to or above. Like we had no real confirmation here of a follow through, especially if you had this VWAP on your chart, which if you don't have it on your chart, I would highly recommend it. Like we came right, the price action came right to the VWAP and then just straight rejected pretty hardcore. So like you kind of just want to be aware of the actual volume. Volume for today was pretty low, which makes sense. Most of the big institutional traders, like the big boys, they're sitting on their hands. They're waiting to see what's going to happen with these earnings events. They're going to see what's happening with, the federal announcements this week. Like this is another reason why I said in the beginning, you do not have to trade every day. This is a prime example. This is a low volume day. It was a choppy day. Big boys are not involved yet, right? So guess what happens when the big boys aren't involved? Nothing's going to really move because us little boys, and us like smaller fish, medium fish, don't move the market. The SPY requires millions and millions of millions of dollars to properly move the market, and us retail traders do not have access to that capital. Therefore, we want to be aware of the environment we are in. We want to be aware of the economic structure. Currently, this week will probably be the absolute best week with earnings, right? There's going to be tons of different opportunities, but you don't want to just blow your load in the first 10 minutes of the market, because what happens is, that's a lot of you guys in here. You literally blow your fucking loads within the first 15 minutes of the market trying to trade the open. And guess what happens? You either take a loss in 15 minutes and then you're all pouty about it, or you blew your entire, you blow your load and you completely have no buying power for the rest of the day. So you're just sitting there when the actual move happens 15, 30 minutes later, you're just sitting there like, wow, I traded open. Now I have absolutely no buying power the rest of the day. Yeah, this is why we don't do that. We do not do that type of stuff. If you want to trade the open, don't use your entire account within the first 5 minutes, because that happens more than you think. A lot of people are sidelined in the first 15, 30 minutes, and then the actual real move happens right afterwards. So, keep that in the back of your mind. Can you show us how to buy a debit spread on TOS? That will take too long. I'll just link my YouTube. I have a debit spread video. So give me a sec. But anyway, when I post that up, let me just read other questions real quick. Where can I find these Zoom recordings? I post every Zoom recording on my YouTube. I'll link that in the chat in a second here. Just reading more questions for you guys. What indicators am I using? Yeah, that's a good question. So on this layout, I don't have them properly on, but I'll list the ones I usually use on a daily basis. So I use moving averages. So I use the EMA, which is the exponential moving average. I use the 300, the 200, the 50, and that's pretty much it. I usually don't, if anything, if I'm feeling frisky, when I look at the trend, then I'll use the 21, but I don't use any of the the 8, the 9, or any of that type of stuff. I use the more the moving averages that show me the best risk to reward trades, and then I use the VWAP, and that's pretty much it. I don't use anything else. But yeah, I hope that helps. One sec, still reading. I overtrade. How do I identify? What do you mean? You just answered your own question. You just said you overtrade. So there's your fix. Literally just don't overtrade, right? Like that's another thing, just since I'm talking about that now. Most people, they're greedy as shit and they're like, oh, I just made, I don't know, let's say I made my profit target for the day, the realistic profit goal I had for this specific day, and I made that in the first 30 minutes of the market, but I'm being greedy and I want more. Therefore, what you're doing is you are now officially over trading. And when you put more trades on, your probability of success becomes less, because the more trades you put on, the less probability of winning. So what happens is when you overtrade, you are actually going to possibly lose, because there's a bound to be a time where you end up losing, and the more you overtrade, the higher the likelihood of that actually happening. So just a pro tip: if you make your profit goals for the day, especially really quickly, just get up, because when you keep trading and trading, you're gonna probably take a loss. Hope that helps. How can one sec. Oh, one sec. What volume indicator are you using? Yeah, good question. So what it's called is one sec. Buy, sell, volume totals for period. Now there's a different one on Thinkorswim. It's a customized script. It's pretty much works the exact same thing. If you want it, I can just send it to you. Just message me either on Discord or on Telegram, and I'll happily send it over to you. But the one on TradingView is free. So that's the name of it: buy, sell, volume totals for period. Hope that helps. How do you tell if it's a low volume day, since every stock is different? Every stock is usually housed in something bigger. Therefore, you want to look at the overall big boy, such as SPY, right? You want to look at maybe QQQ. You want to look at a different index. So like let's say you're possibly trading energy stuff, energy stocks. Go to the energy sector. If you're trading financials, go to the financials, look at the volume, right? So like you don't want to, like, the rule of thumb is pretty much, if you want to see if the day is low volume or not, just go to the overall big broader market. Usually you can get a good gauge with SPY and QQQ, or the Dow, obviously. Hope that helps. One sec. When your account is smaller, you feel more urge to trade more often, especially if you're trying to make money to live with this. One of the many reasons psychology is a topic. People are in a hurry to make a trade, make quick cash. Yeah, absolutely. That's a great comment that you made, for sure. Unfortunately, people are very short-minded, and when that happens, because they think trading is a get rich quick scheme. And I'm sorry to break it to you if you think that is true. I'm going to tell you this straight to your face: you will not be profitable. I'm even going to put this right in big bold: trading is not a get rich quick scheme. Because if you think about it, if you have no idea what the hell you're doing, but let's say like this is a prime example, because most of you guys probably in here understand. So 2020, 2021, we had an extreme bullish rally, right? I'm sure you guys probably blindly took signals and got some money, right? But now what's going on right now? We're no longer bullish. We're really choppy sometimes. I bet your account's not doing really well, huh? Right? Trading is not a get rich quick scheme. You might make some money, sure. But if you have no idea how to keep it, if you have no idea how to trade properly, you're going to lose it and you're not going to be profitable. Trading is a journey. It is not a sprint. The sooner you realize that, the sooner you're actually dedicated, then you will actually be profitable. Trading is not a get rich quick scheme. If you think it is, you are not a trader, you are a gambler. That is a real fact. Just reading on the questions, one sec. Yeah, absolutely. So one question is, if there's a breakout from say a bull flag on volume and it breaks back down to the flag, is the flag pattern still valid? Yeah, the flag is 100% still valid as long as the price action holds. So let me try to find an example. One second here. Let me try to find a good example. This is fine. Yeah, this is fine. Okay. So, all right. Okay. Where was I? Here we go. Okay. So if you look at it, we ended up coming right back to the initial breakdown zone. So like here's the impulse out, and then we went right back to it. So this is what is known as a first pullback retouch. So like these are the type of trades you actually want to trade. You don't want to trade here as it's already moving. You want to trade on the pullback simply because your risk reward is better. But just because it comes back to the actual, it's a quote unquote false breakout, doesn't mean it's invalidated. As long as it holds structure, it's perfectly fine. One sec, still just reading some questions. All right, so the VWAP for me, so a question about VWAP, it's a little bit different on, wait, is this, oh, this is why. Where the hell is my VWAP? Oops. There's my VWAP. There we go. Anyway, so I usually just only strictly use the VWAP itself. I don't use the upper band. I don't use the lower band. I take all of it off. I just use the actual VWAP line itself. Yeah, price action above the VWAP is bullish. Price action below the VWAP is bearish. Just pretty much really simplify that. I have a video on my YouTube actually how to trade VWAP if you're not familiar with it. I'll link that in the chat in a second here. When do you recommend getting in? That's a good question. I usually do not trade the open. I'm very vigilant on not trading the open. I usually become active at like 15 minutes in, like 30 minutes into the market. Trading the open is can be very dangerous. Lots of volatility, and it's just the pretty much the better moves, like the higher risk reward moves, comes later in the day. Like this is a prime example. Like let's say maybe you missed this entire leg down. Sure, that's okay. But like right at 10:30 a.m., your risk reward is absolutely insane here. Let's pretend you didn't catch the full bottom, but let's say you pull right there. Your risk is right underneath low of day. Your first real target's like right where we finally dropped. This is 3-1, right? Now let's pretend you have some runners. That runner is now 4.5-1. So your risk reward's better. Hope that helps. Can you show some recent examples on supply and demand zones? Yeah, sure, I got you. So supply and demand is really simple to like, what's the word? To practice on with indexes, simply because they happen every single day. So this is what is known as a rally base. So what happened was, so we get the first leg right here, we get the rally, but then what we happen is we didn't really, there is some sort of a demand down here, but we didn't find it on this time frame, right? This is the importance of time frame analysis. Like I'll leave this here because there's some sort of demand right here regardless, but like this is something that actually formed a demand. So we get the drop, we get the basing. So the buyers and sellers agreed on price within this 4-hour time period. The next candlestick, we open right side by side, and then we had that large imbalance. So what happened was 3 different criterias that have to be met for this specific thing for both supply and demand. In this case, this is a drop. That's criteria 1. This is a base, criteria 2, and rally, that's criteria 3. So there has to be multiple different criteria And if they're not met, you don't get 3 different criterias, then it is not a true supply or a true demand zone. In this case, this is a demand zone, and you can see it got retested the next day in pre-market, and all the leftover buy orders got filled immediately, and you can kind of see the result. Let's do something on like an intraday basis real quick that happened. Let's find out here. It's probably something. Yeah, so this is a different one. This is a little bit trickier to spot. So this is a rally up. We get the basing. Buyers and sellers agree on price. We have an equilibrium. And then we get that drop. So that meets my 3 criterias. This is, I would chart from the bottom of this body to the top of the wick. This is a supply zone. There's leftover sell orders sitting here. And you can see as soon as we came into the after hours, those sell orders got filled, and that's why we're falling. Now, we also formed a 30-minute demand zone right before the end of the day. We go from the top of this body to the lowest wick there is. In this case right here, we make it green. Okay, so this is a drop, base, rally. There's 4 main structures and only 4 main structures that will actually move the market. There's rally, base, rally. There's rally, base, drop. There's drop, base, drop, and drop, base, rally. These are the only 4 main ways that the market will move because it's supply and demand. That's the only way the market will move. The sooner you understand and can identify these 4 different structures, you'll be worlds better with identifying what type of move is going to happen and risk reward trades. I made a more in-depth video on my YouTube. I'll link that right before the class ends. Just so if you want to check out supply and demand, highly recommend it. Definitely something to watch and learn from. Do you set a profit target on a normal day? It's kind of a vague question. I set profit targets for every single trade, every single day. You want to understand where you're getting in, where you're invalidated, and where your targets are, your profit targets are before every single trade. If you don't have that, then you should not be entering a trade. Need a feature to lock me out of trading once profit is made. That's a cool fix. Delete your apps. That's it. We'll delete your apps for the rest of the night and then re-download them in the morning. What percent of my account should I take a trade with? That's a good question. It depends on your account size. Just real quick, I suppose. Let's say you're in a smaller account, maybe let's say $1,000. I would recommend not using more than 40% allocation, therefore $400 per trade. That's aggressive. If you want more safe, I would say like $250, right? But you don't use that same 40% allocation once you grow larger. Like say if you're on a $10,000 account, you no longer use 40% allocation. You're probably using like 15 to 20%. So when your account size grows larger and larger, your percent of your account portfolio used per trade should be less and less and less. Hope that answers your question. How can I message you? Sure, hold on. I'll post my information, I guess. So this is my Discord tag, and this is my Telegram tag. If you have any questions, feel free to message me. Always happy to help. And for the people asking about my YouTube, this is my YouTube. I'll link in chat for everyone. There you go. 1 sec, let me scroll back up, answer some more questions real quick. By the way, if you have any questions, feel free to ask them now. I'm going to end this session in like 5 minutes, just an FYI. Is it weird thing that I only trade SPY and QQQ strictly? No, not really. That's as long as you find yourself making money, then that's perfectly fine. I myself also primarily an index trader, so there's nothing wrong with it. But there is one thing that I would like to discuss real quick about that. When you tunnel vision only one thing, such as SPY and or QQQ, you can miss out on a lot of moves. So a quick real life example, I was focusing on SPY at the beginning of the year. Like I was focusing on SPY a lot at the beginning of the year, and I missed out on some insane opportunities. Like I missed out on the entire oil rally. Remember when oil was, freaking off the chart in the beginning of the year? Let me show you guys. I missed everything. I missed this entire rally up, right? I missed all of that. I missed this. Like the COVID stocks getting dropped. I missed oil stocks rallying, you know what I mean? So like trading one thing is okay, but you can't just fully tunnel vision and not, forget everything else, because you can miss out on some extreme opportunities. Hope that answers your question. How long did it take you to become profitable? That's a pretty good question. Let me think. Probably like a year and a half, give or take, like a year. I started finding like some consistency within like a year or so. And then I started getting a little bit more profitable like a year and a half in. So it's definitely a slower process. Everyone has different learning curves for sure. I would highly recommend honestly trying to find a mentor, because like they can guide you. Because that's another reason why I have a little bit, faster learning curve of being only like a year in. I was starting to see some good progress because I picked up a mentor that kind of helped me and guide me along the way. So definitely something to look into if you're want more education. What else we have here? I'm not answering any tax question. I apologize. Please hit up an accountant. Yeah, that's a good thing to mention, Nick. I took $1,500 to $15,000 in April to May. I believe that was like the bullish rally. Didn't we have a bullish rally in April to May? I think so. I believe. Actually, it was a drop. It was a drop. Cool. You capitalize on the drop. Congrats. That's a good trade opportunity. Yeah. So it looks like you're more of a directional based trader for sure. And then you're having some issues with the chop. So that's something you want to work on. How to remove upper and lower band on VWAP for Thinkorswim. It's kind of like the same mentality. You just click settings for the VWAP and it'll say upper band and lower band, and you just uncheck all those boxes. Yeah, that's a good thing as well. Practice trading the open with paper money. Yeah, absolutely. People like, undervalue like paper trading, and they kind of scoff at it. Paper trading is really not that bad because it allows you to practice without using your actual real money, right? It's definitely very helpful. So I would highly recommend that. Yeah, 100%. Do you use intraday supply and demand zones? Yes, I do. Every single time I find a new zone, so like every single time I'll draw it and refresh it. But once they become invalidated, you got to get rid of them. So what I mean by that, if they end up getting pierced, so like let's say the price action goes up here or goes like lower than that, the zones are now invalidated. Therefore, you got to get rid of them. Hope that helps. What do you do when you have a losing day? Just understand that losses happen. You're not going to be 100% win-loss ratio, period. If anyone ever tells you they have a 100% win-loss ratio, they are the biggest scammer in the world. It's very, very impossible to have a true 100% win-loss ratio. You will always take losses. You have to understand that and pretty much try not to let your ego get in the way, because a lot of times, myself included, I would be really emotional, and I would let that snowball into the next day, sometimes days later, right? And what happens is you end up losing confidence because you're still thinking about that loss from 3 days ago. Every single day is a new day. And please just make sure also, you're reviewing your trades and like understanding what you did improperly so you can fix it for the next time. Definitely you want to review your trades. It's super, super important. Since you were talking about mentorships, do you yourself offer mentorships? You're great at explaining things, and I like your upfront attitude. That's a good compliment. I really appreciate that, truthfully. Really, really appreciate that, actually. Yes, I do offer mentorships. Fun fact, I'm actually hosting a group mentorship in about a week, 2 week start time. It's going to be 30-hour duration, A to Z, pretty much, and it's going to be 3 months long. So if it's up to, if that's something you're interested in and you want more information, just feel free to message me privately and we can chat about it. But thank you again for the comment. Really cool compliment you gave me there. I appreciate that a lot. What stocks would you recommend with a $1,000 account? Yeah, that's a good question. So, let me see. Off the top of my head, Amazon's good now since it's stock split. Google's good since it's stock split. AMD's good. Apple's good. Like pretty much any of like the main like tech names. Anything that you can find is like under $300 per contract, ideally is pretty okay to trade, as long as it's highly voluminous and the bid and ask spreads are relatively pretty tight. Definitely you can trade that for sure. Can you explain gap fills and how to trade them? Yeah, good question. So a gap fill is it's pretty much just an imbalance to the market. There's just a straight imbalance to the market. So what happens is, so what it usually happens in the futures market, it happens in the futures market. There's basically an imbalance and there's a large reaction, but you don't really see that type of thing inside the actual intraday market. Like on the actual, so like it happens in the futures market with ES, but it doesn't really show you the price action on spot. It just shows you the gap sometimes. So what the gap is just an imbalance to the market. So how to trade it? Usually like for example here, let's say the price action goes way up here and breaks this high, this all-time, not the all-time high, excuse me, this high right here, the recent high, then you already pretty much know your first target. Your first target is right here at that gap fill. That's your first major target. You use gap fills as targets. And then similarly down here, let's pretend price action is way down here now, and we pierce below this low, and here's the gap. There's a gap right here, right? You already know your target. Your first major target is right at that gap fill. That's pretty much how you trade imbalances and gaps. How do you go to the chart and find setups? Good question. It's kind of, that'll take a little bit longer to explain. I'm trying to sum it up real quick. First, you have to understand what type of week it is. So in this case, what you want to know who's kind of reporting, because you can have sympathy plays off of it. So like this week, most of the big name tech are reporting. So you could probably find something within that specific sector that is not reporting. So you're able to play sympathy plays. So for example, since AMD, I do believe reports next week. Yeah, reports next week. The premium is not going to be super jacked up. So you can play that type of stuff as a sympathy play. So like if the main whatever the main thing is running, has an earnings, you could just do the sympathy play, right? Hope that helps. Maybe you came in late, but this is another question about mentorships. Yes, I do offer mentorships. If you are curious about it, please just message me privately. We can chat about it. But thank you again for your support. And hold on, any other questions you have? Let's see here. As a beginner, would you recommend to trade with 3 stocks? Yeah, absolutely. Yeah. You want to, less is more. Less is more is a good approach. Like, yeah, you don't need to be looking at 10, 20 different stocks. Like, as long as you get like 3 stocks that you're comfortable with, yeah, 100%. You don't need to be looking at all this different stuff. What is the most you blew? Are we talking like Accounts, I'm not sure how many accounts I've blown. Probably like 5 to 7 accounts, give or take. Not sure. Yeah, I'm not really sure. Uh, I didn't really lose that much money though. I lost probably like $10,000 in the first like year and a half or so, and I made all of it back within like 6 months when I actually figured out how to trade. So don't think about the money you possibly lost. Just think of that as like a learning method. You know, like that's your kind of like your tuition in a sense. Because once you actually figure out how to trade and like become consistent, like that money will come back relatively pretty quickly. Hope that helps. Best psychological advice: take your profits and meditate. Hope that helps. Uh, Hold on, I'm just answering a couple more questions. So I'm going to end it here. Uh, is it possible to trade off your phone TOS app? I mean, technically it is possible to trade off your phone. I wouldn't really recommend it. Personally, I don't like to do that. But yeah, it's very possible to trade off your phone if you're comfortable with it. What is the best way to learn how to use tools in Thinkorswim and TradingView? There's tons and tons of videos on YouTube. I would recommend just maybe just searching up Thinkorswim tutorial tools, you know, TradingView tool tutorial on YouTube. Yeah. What are your most reliable patterns? Good question. Truthfully, I don't like that's another thing that's a common misconception. People are like so, for lack of better words, infatuated by patterns, but not just because it's not a clean pattern doesn't mean it's not going to work out. Because like that's kind of goes into a different story, but that's like a trap and go slash stop run hunts. That's an entirely different segment. If anything, if you don't know what that is, if you're not curious, if you're not familiar with what a stop run hunt is, how to look for it, and how to identify it so you can capitalize on it, just let me know. And if you're not if you're not comfortable with knowing how it works, I can just make a segment on that. Maybe our next class on Wednesday, because that itself will take like probably like 20-30 minutes just to answer that question. Oil is reporting Friday. Would you consider going long on oil? Yeah, I wouldn't really necessarily go long right before earnings draw like announces, simply because it can drop a little bit right after the announcement. So you could probably possibly get a better entry. Do you think the market has bottom? No, I do not. Okay, I'll go over stop hunts next class on Wednesday. I'll show you guys how to like kind of identify them and what I meant by why patterns aren't 100% accurate and people shouldn't just be looking for pattern trades, because they're, I mean, don't get me wrong, they're quote unquote reliable, but not nearly as much as people actually think they are. You know what I mean? So I'll go over that next on Wednesday for you guys. But anyway, I'm gonna end it here. I'll drop my stuff if you want to chat with me. I'll drop my Discord, my Telegram, and my YouTube. I have lots of value on my YouTube if you want to check it out. I have tons of different videos there. Um, if you want to contact me and ask me questions personally, if you want me to help you review some of your trades, just message me either on Discord or Telegram. But I thank you guys for listening. I appreciate you guys. I hope you learned some stuff, and I'll see you guys on Wednesday. Thank you again.